All right, in today's video, we're going to be going over rejection blocks, how to properly use them. And this is going to be straight off the dome. So bear with me. I think I should be pretty good at explaining these things. Um, so yeah, without further ado, let's get right into it. So there's rejection blocks on every time frame. There's even rejection blocks on the weekly time frame, even though I don't really look at them. Um, a lot of the time. So I know and I understand that as of recently, as of this year, rejection blocks have become quite a big thing, especially when it comes to bottom and top ticking. But before that, and before the whole Powell thing, no one really understood what a rejection block was, and I was one of them. So let's get into the definition of what a rejection block is before we start, only focusing on the fact that they may or may not bottom tick. So a rejection block is essentially the wick of a candle that is rejecting from a PD array or like a liquidity sweep, right? And so I like to imagine that these wicks are the orders and the buy and sell stops getting filled to send price the other way. Therefore, that's why wicks have value in it, kind of like for value gaps. That's why wicks have value for value, not for value in it, because of the fact that it's basically the story of where we had these sell stops, right? And the center of it, right, is probably one of the most sensitive parts of a rejection block, and that's why it bottom and top takes, right? So, with that being the story, you could use rejection blocks in essentially two ways, right? So you can use them like I said to bottom and top tick, which is for example right here, right? Or you can use them to essentially show you where price is heading next. So in this example right here, as you can see, we left this rejection block, and if you're trading around this time, we would get this 4-hour closure. This should let you know that we are rejecting from this area, and now we are bearish. So instead of just using it to bottom and top tick like here on Thursday, here on Monday, you can use it to give you a bit of market direction, right? So get this rejection block, and now come New York session and later in the next following days, we head lower towards this low right here, and then ultimately our main drawn liquidity, which is this low down here, right? And then guess what we do? We leave a rejection block here at the bottom, right? And we head higher from there. And here's another example right here where we leave a rejection block here. Let me actually use this rectangle right here, and we come lower, we leave this rejection block, right? Then we head higher. And it's going to be the same thing a lot of times. So rejection blocks can be a good sign of market structure to show you where price is heading out. So when we're looking at it in real time, and how I personally utilize rejection blocks is I'll have them marked out on my charts, and obviously I'll have the CE marked out. And if we tap into a rejection block and we start getting a V-shaped recovery, that's good enough for me to actually go from there and utilize that. So we'll just take something obvious like this because we're higher time from bearish, right? As you can see, even with this rally up, the daily time frame, we were bearish, as you can see, right? We inverse this daily gap, create another daily, and we had yet to take out this significant low, right? So we were bearish. With that being said, that makes that daily and 4-hour rejection block valid. And also to mention something, stacked rejection blocks, which is rejection blocks that you can see in multiple time frames. So for example, there's a 4-hour, and then here there's a daily, and maybe there's a 1 hour, not in this example, but another part that makes a rejection block valid is if you have a PD array sitting inside that rejection block. So we have a 4-hour rejection block, but only 1 hour, right? We have a IFEG, right? So that makes a rejection block stacked with a IFEG and and obviously the rejection block itself. And then maybe on the 15-minute, there's another IFEG right here. So you can kind of get this stacked right here. Here's the IFEG. Right, so we have the CE of this IFEG and the CE of this rejection block that's stacked, and we have this unfilled 15-minute. So rejection blocks with PD arrays sitting inside them are your strongest rejection blocks. Those are your strongest rejection blocks. Those are the ones that are most likely to top and bottom tick. If you're into top and bottom ticking, there's some sauce right there. But I personally don't do so anymore, so I don't really care. But yeah, I'll definitely have it marked out on my chart. But using the example from today, we hit it a few times, right? And then rejected lower. I entered over here. There's a 30-second IFEG here, and obviously I was targeting an FP low. Or whatever that it was, and we came back. I got trailed like right here, but come back higher, we retweet. Mind you, rejection blocks are one of those PD arrays that are used multiple times in price, right? They can be tapped into multiple times, right? And we head lower again. We get a 2-minute inverse right here. I enter. Stop loss at this high, targeting that NFP low again. Actually, I think I was targeting down here, and TP hit. So definitely want to have those marked out on your charts. I want to show you an example where we leave a rejection block actively in price, where it can kind of show you where we want to go next. Here. Here's a good example right here. So this is the 4-hour going into 10 o'clock right here, right? So obviously we're pretty bullish this day, so even without this rejection block, you should understand where price is going next. But and I've used this example multiple times in videos, but we have this Asia high. And then we have the AM high, so start of AM high, and then we have like London highs and stuff like that. So a lot of you guys will see price take out these highs, right? You guys will see price take out this high, and you'll be like, oh well, we should come all the way back down. Now you're targeting down here, which is an extremely unprofitable thing to do, right? You're trying to target the external high, and then now you're trying to target the external low. That's a very unprofitable thing to do. Do not do that. When on the 4-hour, we are a higher time frame, rejecting from this area, rejecting from this gap right here that was sitting in equilibrium of this range. And if you treat this like the 1-minute, right, this is one of those gaps that you'd expect to send us higher to these areas right here in the first place. So once you get this 4-hour closure right here, we have a very valid rejection block. That should be telling enough for you to understand that we are now bullish, and that we are 100% heading for these highs and then getting up into these areas. So you don't necessarily have to use it on the 4-hour only. A good tell sign that we are getting higher or we're rejecting from area is perfectly seen on the 15-minute and the 5-minute. This is what I use personally to understand that I'm on the right side of price. So in this example, what do we take? Not sure exactly what we took. Okay, there we go. Was this that day where we had extremely bad price action? not entirely sure. This is probably a bad example, but it doesn't matter, right? Let's just say you entered, at this IFVG down here, right? And you're targeting up here. And let's just say you just don't have break-even rules for this example, right? You're on the right side of price whenever you look on the 15-minute and we get a closure like this. We get a 15-minute rejection block right here. Now you have the rejection block actually protecting your stop loss as well. And the thing about rejection blocks, like I said before, is they are a tell sign that we are going the opposite direction, and it's kind of like a slingshot in a sense, where we're now pulling back and then we sling the other way. Therefore, the ball should be rolling the other way, right? So the same exact thing when it comes to trading. Sorry guys, my ears are a little weird. So yeah, that's one example. I do want to get into some other examples so you guys can get a better sign of things. I want to use a 5-minute example. All right, perfect. Okay, so this to me is a good sign. This happened at 12:30, right? We are delivering from this 5-minute gap, right? And we have a 5-minute inverse right here, right? So this to me is really good. All right, so whenever we have a rejection block, right, and then we tap into that rejection block and we head higher and inverse the gap, this tap into this rejection block, mitigated a PD array, put your stop loss, set it at the swing low right here. So if the swing low is at, if the swing low of the entire price leg, with this price leg right here is a rejection block, we tap into it, that next candle is low, you can put your stop loss there for better RR, okay? And obviously we headed higher even with this rejection back lower. But as you can see, before we rejected lower, what did we leave? We left another 5-minute rejection block, right? We're delivering from this 5-minute gap, and we left another rejection block, and we had lower. So I feel like ultimately rejection blocks are one of those things where that's the first sign in a reversal. This is the first sign in a smart money reversal, is that rejection block. So and also it's a 15-minute rejection block. So now to use it in a more advanced way, you can time your entries with a rejection block. For example, 9:30 right here. What is this? All right, why is this inverse valid right here, which is from last Friday? Why is this inverse valid? Well, if you see here, we inverse at 9:41, meaning in the next to this candle, in the next 3 minutes, price is going to, the 15-minute candle is going to close. So all you need for this trade to basically be validated by price is for the next 3 minutes, price just remain somewhat underneath this candle, right? If we come up at 9:43 last second or 9:44 last second, that lets you know that the 15-minute wants to close bullish. And if the 15-minute closes bullish, your trade is invalidated. But if you time it correctly, right, you're like, okay, I'm gonna enter 9:41. All I need is the next 3 minutes to close relatively bearish. Now we're looking at a strong rejection block, and that lets you know that now you should be heading lower, right? And with a strong rejection block like that, right, you can expect price to keep going all the way down there for the next 15 minutes as well, or at least the next hour, because since rejection blocks is a huge tell sign that we are leaving this area and we're leaving this range, that should be a confluence to the next strong liquidity, which to me were these equal lows, right? So same thing. You can also use the premium rejection blocks like this, we get a rejection block towards here. Obviously, have drawn liquidity and higher time from order flow. For example, we inverse this 15-minute left rejection block. Therefore, price rejecting on this one right here could just be a retrace back into this rejection block to ultimately send us lower, which left a 3-minute inverse, which I took as well to pass some evals. So let's just say we get this closure, which is here at 10. We come up, right? It's here at 10, right? And we come up and we tap back into it right here and respect it and then head lower. So you can use rejection blocks that have been ran through on your screen as well. So they don't necessarily have to be tapped into. They could be ran through like this and you can still have it marked out and graded. Same thing for let's look in price, guys. Same thing for like something like this. Like if we get a rejection block and we close over it like this, you could use like we get it close, we could use it over here, and then we might get a retrace up here, right? Obviously this didn't play out right here. This is like Asia, but I'm just showing you right now because I can't find an example directly now. Maybe I can find a great example. I'm not a bottom and top ticker, so I don't really, look for these things constantly, but sometimes I do have them marked out, like maybe this, right? Maybe you can even grade a rejection block in quadrants, which is something I'll also go over, right, to help you understand order flow. Is we'll come through it, right? And you see how this next candle opened, we tap into the bottom quadrant of it, we came up, and then once we hit the 50%, the CE, all the bodies are closing above it, which dictates bullish order flow. And we even come down here and the body closes right above it, and we tap it one more time and head higher, and now we're in the upper quadrant, and now we're respecting the upper quadrant as well until we're ultimately at the top, and then we respect that as well. So as you can see, keep respecting it. So you can use the quadrants of rejection blocks to dictate order flow. You can rejection blocks are just extremely useful in that way. It's kind of like NDogs and NWOGs, just using the quadrants of it. You can use the daily quadrants, for example, like this daily, right? See in price how we respected it. Here, we gotta let price get to it. So we came up, we tapped into this daily, the bottom quadrant of it, 25 reject, and we finally get to it, and then we respect it right here, and head higher, then come back, tap the 50%, reject from it, head lower, same thing, tap back, close above the 50%, close above the 75%. Now we're using the 75% of the quadrant to essentially keep us up in price. As you can see, the bodies are closing above the 75%, therefore that's bullish order flow. And then once we get that final closure below, we get a change in order flow with this rejection block. Now we are using it as resistance to send us lower. So you can grade rejection block quadrants like that. If you're interested in that, that's ball knowledge. And yeah, that's basically rejection blocks, man. Like that's what it comes down to. Like you see this rejection block here at 1 o'clock, right? Get this rejection block that lets us know that the smart money reversal has occurred. And now let's just say you took this 5-minute IFEG to the downside. Oops, wrong side. 5-minute IFEG to the downside, and you timed it with the 1 hour closure, which is right here. And now you know that your trade's definitely going to work because we have a 1 hour rejection block coming from this 1 hour bearish gap. Now you could target lower. And rejection blocks is also something that is seen what's it called, for CRT, which is something that I don't necessarily trade, but it naturally works. For example, we have this range right here, this candle, right? And you see how we come up, we take the high out, and then we reject back into the range of this candle. Therefore, you can expect the bottom of this range to be tapped into. All right, understand that? Same thing right here. We have this high taken out, we close below it. You can expect price to come back and tap the low of it. Same thing. See if you can find another, either tap the low or get to at least equilibrium with that. So even with this one, this high, or we come up, we reject lower, close inside the range, and we come down to at least 50% of this candle's range, right, which is down here. And then same thing right here, take the low, close back into the range, and you can expect the high to be taken as well, right? So that's CRT, candle range theory, which is an entirely trading concept within itself. I know Johnny trades CRT. So CRT can be really good to use, but I do want to preface by saying this, that you can use 1,000 different concepts, but you have to understand that you don't need them all. Okay, I don't use CRT when it comes to my trading because of the fact that the things that I do use is automatically going to be aligned. All these concepts automatically align with each other. So, and that's exactly why I don't use the quadrants of higher time frame PD rays, because all the other concepts that I use, the higher time frame PD rates, are automatically going to be aligned anyways. You feel me? So, yeah, that's rejection blocks. That's quadrants of rejection blocks. And our next video is probably going to be order blocks. That one's probably going to be relatively quick. There's nothing too crazy about it. And yeah, I think rejection blocks is probably one of my favorite PD arrays. So if I were you guys, I would just have them marked out on my charts. And if you're interested in having the quadrants marked out, go right ahead. That can be sauce, right? Understand how the body closures are. For example, in this example, where we have this rejection block, we come back, we stay in the upper quadrant, and if we're staying in the upper quadrant, that dictates a lot of bullishness. If we stay in the lower quadrant, that dictates a lot of bearishness, right? So you can use wicks in the quadrants in that way to properly use rejection blocks. So that's going to be the video. If you guys have any more questions, be sure to ask me in the Discord, and I'll answer those questions.